What if the next major investment cycle is not going to be defined by a single asset? What if the real opportunity emerges from the collision between artificial intelligence, Bitcoin, monetary policy, and physical commodities? That is the central question raised by macro investor Jordy Visser in a wide-ranging discussion about where capital could move next. At first glance, these subjects appear unrelated. Artificial intelligence belongs to technology. Bitcoin belongs to digital assets. Silver belongs to commodities. And the Federal Reserve belongs to monetary policy.
Let's just put it that Elon Musk is putting on it. Let's just take it in different stages and say, do I think there's a higher risk of terrorist events happening? Yes, but they happen anyway. So the question is, can they be bigger? Can they be more dangerous? Yes. Do I think that's going to happen? Some form of it, I'm sure, along the way will. But the policing and the way to deal with those problems will also get better. One thing I like to tell people on this is when COVID happened, the most amazing part of this is that the vaccines that were created by Moderna were done before the first person died in the United States. And I don't think most people know that. The blueprint for the virus was sent by the Chinese into the public. And that weekend, Moderna took their AI models, ran it on it, and they came up with the blueprint for the vaccine that within less than 10 days. I think it was over the weekend. But it was before the first person died. You get the ETF.
Yeah.
And then you get President Trump winning the election and basically going pro-Bitcoin and the U.S. government. So if you were an ideologue, why wouldn't you sell out of this? Now, as a market person, if I read that book 10 years ago, we'd all say the same thing, which is if those two events happen, that would be a sell the news event. Meaning,
one of Visser's most important observations is that artificial intelligence should no longer be viewed purely as a technology investment. It is becoming a capital allocation phenomenon. The first phase of a technological revolution is usually characterized by excitement, discovery, and enormous repricing. Investors identify the companies most exposed to a powerful new trend. Capital floods into those companies, and valuations rise dramatically. But eventually, the investment question changes. It is no longer, is this technology transformative?
I think AI and eventually quantum, AI is helping Bitcoin. And I know that sounds funny to people, but AI is already involved in cyber attacks. And we just had one recently with Hugging Face and OpenAI. And the OpenAI people didn't even realize this was going on. They didn't realize it for, I think, almost 2 weeks.
Yeah.
So we're already having hackings. The reason that's important and a positive for Bitcoin is because you're getting a lot of movement now by a lot of different places. The banks are getting involved. So everyone who cared about the ideology, the paper I wrote that you referenced in terms of the Bitcoin IPO, the reason this is such an important thing is because all the banks, Goldman Sachs, Morgan Stanley, BlackRock, they're all getting involved in Bitcoin now. Well, they now care about making sure it's secure. They care about being involved in this. Michael Saylor's out there working with these groups. Like everyone is now realizing we have to have a plan to deal with this. And so the hackings and the things that are going to go on in the non-cryptography side are going to impact the way that they think in preparations. And some of the solutions are going to come from the exact same solutions as to what's happening. What's the best cure for a hacking on anything? We're learning. Use the models to deal with it. People may not know this, but if you go read about so Hugging Face is a company that was hacked into. So there was a cyber attack, not by humans, but by OpenAI and their new model. When it broke out of its own guardrails, its sandbox, and broke into this thinking Hugging Face would have a solution to the problem they were trying to solve. The way that Hugging Face found this was the Chinese open source model to go look as to what was going on. Well, that's the same way that in the end, you need the best police force to deal with the attacks. And the best police force will end up being quantum or AI agents to kind of help with this and figure out new ways. So I just think that in the end, Bitcoin will be protected because it needs to be. And the more that you get the governments and the banks and all this, now it's no longer as decentralized as people may have wanted it. But I think the reality is it leads to more protection going forward.
So do you think that AI can also be evil, so like negative for human society and mankind?
I mean, every single person, Elon Musk, Demis Hassabis, Sam Altman, if it gets in there will be bets that come on that are bad. I don't think. So let's break it down this way, because when Elon Musk gets asked and he goes, "Is this going to be the 25% chance?" I think he says 10% chance it could be the end of the human race. Okay, yeah. So let's just put it that Elon Musk is putting on it. Let's just take it in different stages and say, do I think there's a higher risk of terrorist events happening? Yes, but they happen anyway. So the question is, can they be bigger? Can they be more dangerous? Yes. Do I think that's going to happen? Some form of it, I'm sure, along the way will. But the policing and the way to deal with those problems will also get better. One thing I like to tell people on this is when COVID happened, the most amazing part of this is that the vaccines that were created by Moderna were done before the first person died in the United States. And I don't think most people know that. The blueprint for the virus was sent by the Chinese into the public. And that weekend, Moderna took their AI models, ran it on it, and they came up with the blueprint for the vaccine that within less than 10 days, I think it was over the weekend, but it was before the first person died. So if you take that now to whatever terrorism situation happens or whatever things go on, AI will figure a way to solve it as well. And that's where we are with everything, is that there will be events, they will happen, they will be dangerous, but at the same point, the policing of criminals, all of this stuff will be easier to do as AI goes, but the solutions to the problems will come up. So I just think that humans are always going to be their own worst enemy, and they're going to be the ones that are doing this. So it could be really bad, but...
This brings us to Visser's most provocative idea, the silent IPO. The concept is simple but powerful. Imagine an asset that begins as an ideological experiment. Its earliest investors believe in decentralization. They believe in separation from government. They believe in an alternative to the traditional financial system. And then something changes. The asset becomes institutionalized. It becomes accessible through mainstream financial products. Governments become supportive. Large financial institutions become involved. Suddenly, the investment is no longer the same thing it was when those early investors purchased it.
I do think they will. I'm not sure when this is going to happen. My gut tells me, since the government is... I view them as being dumb money. So my guess is that they'll start buying it after it's running up and as it's going. So I do think it'll happen. I just think right now with it sitting down here that most people I talk to are becoming more skeptical on it. And that happens when you've had a down move of 50% and everyone starts kind of thinking that maybe what they thought it was, it isn't. I think a lot of people are now viewing it that way. One of the best things that's happening for Bitcoin right now is the fact that the AI trade, in terms of the easy money, which is why when you ask me what's the next micron, if I had an answer, that would mean Bitcoin's not rallying. The fact that I don't have an answer, my answer is Bitcoin, should make people feel happy. I just think the easiest money in the AI trade is now over. It took a lot of capital into it, clearly way too much. And now we're going back to a world where, hey, you can make 20 to 40% in AI, but not 10 times in a year. And so in crypto, I think it'll draw some of the money back. I do think governments will buy it, but I think it'll be when it's higher price. So SpaceX is definitely a situation that to me is like Bitcoin. I've said publicly, SpaceX kind of is Bitcoin in a lot of ways. It's something that you're betting is going to be worth more in the future. You're coming up with reasons why. The only difference between Bitcoin and SpaceX is because people are putting revenues and dollars attached to it, where Bitcoin to me is more of a diversification against something and a movement of dollars into an asset that will be working relative to the other assets, which I don't think will be working. So my IPO thing was this. When SpaceX comes out, he comes up with a plan to only issue a small amount of it. So it's $1.7 trillion issuance, but he only sells off 70 some odd billion dollars. So a very small portion of it gets purchased by the public. Then he puts lockups on everything. And so what happens to the stock? It trades up immediately. And then all of a sudden it starts to sell off. And then everyone starts going, oh my gosh, now all of the people that have made a lot of money in it are going to be selling out, and they're going to go look for some other place to move their money because they're going to diversify. Because you have a lot of people that made millions of dollars or billions of dollars on SpaceX. And now they don't want to have all their money in SpaceX. They want to take some of those gains and move them out. They just weren't able to monetize it. Well, that was the point of the IPO, is that's what an IPO is. And so in Bitcoin's case, I believe the last 2 years, if you would have written a book 10 years ago, maybe you did, Mark, maybe I didn't read it. But if you wrote a book 10 years ago and you said, I'm an ideologue, I believe that this is about decentralization. And the only thing that would make me sell Bitcoin is if somehow it was no longer decentralized. For example, if we issued an ETF on Bitcoin, I'd be out. If a government accepted it, I like the fact that it's against governments. If the government accepted it. Well, those two major events that every ideologue who got in at the beginning, who believed this was about an anarchy type scenario, well, these things were all, everyone who got in at the beginning, these were worth billions of dollars. Well, now, in a span of 2 years, not even 2 years, 18 months, you get the ETF.
Yeah.
And then you get President Trump winning the election and basically going pro-Bitcoin in the U.S. government. So if you were an ideologue, why wouldn't you sell out of this? Now, as a market person, if I read that book 10 years ago, we'd all say the same thing, which is if those two events happen, that would be a sell the news event. Meaning we would have all at that point got out. So my point on the silent IPO is that those two events changed everyone who got in at the very beginning, like the SpaceX, the $1 billion holders. And at a minimum, they need to diversify because it's no longer the same thing as what they invested in at the beginning. So that was the point of the paper, is this is normal when you reach a point. And the reason I thought that that was the case is if you go back and look at where it was when the ETF came out, I think around 40,000 is kind of the level as to where it was maybe the breakout point. Well, now we're at 60. We've gone all the way back to kind of where it was at the ETF. And so theoretically, we've consolidated this during this IPO process. Google did the same thing after it came out public in 2004. So my point on IPOs is when an IPO comes out, it's supposed to go down. People don't have to agree with the IPO analogy, but I do think if you can combine it with it went public and mainstream when the US government and the ETF came out, I think you can now think about the fact how at least there's some similarities, and that's the reason why I wrote the piece.
Once developed, software can potentially be replicated across millions of users. That creates a remarkable economic contrast. Unlimited digital scale versus finite physical resources. And the financial system sits between them. Capital is the bridge. Capital determines which technologies get built, which commodities are developed, and which assets receive investment. That is why the next market cycle could be driven less by individual narratives and more by capital allocation between scarcity and abundance. Visser's framework suggests that investors should watch 4 variables simultaneously.
Well, there's 2 reasons for it. Number one, I believe Kevin Warsh is going to be a central bank head who believes in AI and believes in what Trump is basically believing in, which is kind of this reforming of things. Right now, I believe because of AI, we're heading into a deflationary situation, and the government is going to have to, quote unquote, print more money to some degree and be erring on the side of the labor market and not the inflation market. To get there is going to take a little bit of time because he also has the Fed credibility. He has this goal of reducing the balance sheet, which is a great goal, but the only way I can see him being able to do that, since that's a tightening, is he needs to be easing. And so my gut tells me that reducing the balance sheet of the Fed is not going to be an easy task. I don't know how they're going to be able to do it. It just seems implausible. But the one thing I do know is they're going to have to lower rates. And one of the reasons that silver for me fits in is because people have now gotten off the debasement side. And I believe that on the one side, the governments are going to continue to have to run it hot because there's capital needs inside the AI world, which are becoming an issue right now. We're seeing credit spreads widening related to the hyperscalers. They're coming to the market for massive amounts of capital. well, you can't tighten the balance sheet and help the AI trade, and we need that capital to be there. You saw that China recently came in and tried to support the market. They need their AI trade to continue to work too. So I think the governments of the world are going to have to continue to run it hot in this AI race. And I think we're going to continue to see this quote unquote inflationary impulse that's going to be necessary for the capital, but with a deflationary outcome. So I think inflation is going to stay on the check side. That's one side.
Yeah.
The more important side to me is that silver is a major need in all of the technology going forward. It is a huge input into everything related to AI. We don't have enough silver. The one thing about commodities, whether it's copper or silver, my good friend Raul Powell and I always like to joke about the fact that every time that macro people start saying it's time to buy silver or gold, they end up going in a correction. They never go up in a straight line. They never go through. Silver is a little bit different story than copper because it is part of the critical minerals. It is a major, major component of data centers. And it's needed in every single technology, every drone. It's very important in the military. So there's a demand element, which is AI related. It is a critical mineral. And then there's the debasement side, which I still think the government is going to have to continue to print money. And I think silver is at a point now where it's had a correction since January. It's done enough work on the downside. And now that Warsh is taking over, once his first decision of either this next one is the big one, I think it's happening today as we're speaking. I think silver will be the place to be for the next commodity leg. So.